Welcome. My name is Melissa Gragg, and I'm a business valuation expert and mediator in St. Louis. And I have my friend Emile Flowers here, and she is a
certified divorce lending professional, or CDLP.
So she is an amazing resource that we pull in when we have divorces that involve a house. But today I wanted to kind of go through a lot of questions that people have when they're thinking about getting divorced is where do we start? What do we have to do? When Emily and I get involved, we usually need some documentation. And so part of this is kind of understanding what information can you start to gain and documents can you start to pull together when you're starting to consider getting divorced. Again, this is going to be the time that maybe you don't exactly, you haven't communicated this plan with everybody. You may not have told even your spouse that you want to do this, but you're starting to look around the home office and you're starting to look in your electronic files and you're starting to, have conversations with your accountant if you've never spoken to them, or your financial advisor if you've never spoken to them, and you're collecting or should start collecting documents for a business valuation or some complex financial matters, or even if you're just putting together your summary of property, you're going to need some documentation. I think it would be interesting to see from this list, because this is really a list for valuations, but what about for if you're looking at refinancing the home? Like, do we have the information on here, or are you looking for certain information, Emily?
So for the most part, the information that I'm going to need is here. If you own a business, we're going to need tax returns, usually looking at bank statements for everyone. The one thing that I would say that is not on here is maybe your current mortgage statement, your insurance declaration page, and your most recent tax bill if you currently own a home. Those are very important things to include besides what is on this list. That's really all that's missing. I am going to ask for a lot of this. I really am.
And you have to understand that, like, in this process, typically you'll figure out that you want to get divorced, and then you'll say, okay, how am I going to go about it? You might reach out to an attorney. I would encourage you first start with your own accountant or your own financial advisor, or if you think that there are financial issues, you're at least reaching out to a financial, person that understands divorce. These are just some documents that we're typically going to ask for, but it's because in any of these divorces, really in any state. Now, divorce is a state-specific issue. So if you're getting divorced in Missouri or Illinois or Ohio, then you need to know what is happening in that specific, state. But most states, you're going to be putting together financial spreadsheets for what you have and what you owe. So your house, your cars, any sort of property. And I know this is kind of tiny on the screen, but essentially this is a version of a property statement where you want to list your real estate. What are the vehicles? Now with the vehicles, just like Emily is saying, like collect additional data, you might need the VIN number. You might need the insurance. Who's insured on it? Who's the title? These things aren't important at the beginning, but they're going to be important when you put together that final agreement that is going to go back to the court. Even if you do mediation, even if you do other types of divorce procedures, you're probably going to have to enter back into the court to at least finalize the process and provide some agreement. And this helps you get here.
I would say that the soft credit pull that we do can also help provide some of this information, or enlighten you on what is actually on your credit report, which has happened several times.
Talk a little bit more about that, because I think that is a very, like most of your credit cards even will offer, like you can get your credit report for free one time a year, but your credit cards could have also like the option of looking at it. Like, how important is it to pull your credit in some capacity or check it at the beginning of your divorce? Huge.
It's so huge. I've seen debts that they didn't know they had.
Right.
I've seen judgments and liens that they didn't know existed. One gal had a second mortgage on something that was in her name that she was like, I don't even know what this is, and it went late.
Yeah.
So it's really important, and to see what the monthly payments are versus what the balance is and what the limit is, because that's also affecting your credit score, which is going to be a big deal as well. And that's what we see a lot in divorce is people not making payments or credit being affected, their score being affected, things like that. Anonymous things showing up that you're like, I didn't know anything about this.
I think that's the biggest thing that you like when you're connected in a marriage. There are, two parties could be opening accounts or adding your name to an account, because it could be as, and like, and I try to even think of it, it could be as innocuous as, somebody put your name on the Home Depot card, right? You just want to make sure that as you exit this marriage, that you're pulling your name off of everything. And so at the beginning, it's a lot better time to pull it. But I think, Emily, what you're suggesting is it's also going to be, there's going to be other pieces that are in the process to get the refinance too. Absolutely. It's not just looking at your credit report.
Absolutely. There's a lot of other pieces, but it does help define
Identify
everything in the spreadsheet as well, so that we can look at joint and individual debt and how that's going to be separated.
Yeah, and a lot of this is, your bank accounts are even important, even if they fluctuate, your retirement assets, any debts that you have, any debts that you owe family. There are things called separate or marital assets, which would be things that you came into your marriage, but there's rules around them. So, you would talk to somebody about that. The business interest obviously would require some sort of business valuation, but you could also have things like pensions. You could have things like restricted stock units and things like that. So there could be even your retirement assets, a 401k may or may not be taxable, pre-tax, post-tax. So those are going to be important things as you, separate assets, because $50,000 of cash is not equivalent to $50,000 in a 401k. And if you don't know that, you may trade them thinking they're the same. And I'll tell you, I'm only going to pick one. So you can, I'll tell you the cash is going to be the one for me. So the other thing that we're pulling all of this information. So in one aspect, the two documents that you're going to have to produce for most divorces in most states, they will have different names, but they're going to be a property statement. So it's going to be a listing of all your assets or debts or the things that you have and the things that you owe. And it's going to be your income and expenses. So that's going to be kind of based on your tax return, kind of based on your distributions from businesses. But in general, we're taking your tax return and we're looking at, were there wages to you? Is there taxable interest? Was there business income? What was the deductions? What were your taxes? And that's going to give us a lot of information for a concept called maintenance or alimony and child support. And Emily's going to talk a little bit about the importance of some of these things. Talk to us a little bit, we use these terms maintenance and alimony, which are interchangeable. And quite frankly, people like the word maintenance in the court system, but the people understand that it's alimony. So it's very frustrating, but it also is important when you go to refinance your home that you're consistent with the language that is used. There are little specifics around this process that are important, right?
There are. So depending upon what mortgage, what program we're using. So you have everybody knows this for the most part, Fannie Mae, Freddie Mac, USDA, VA, and FHA, right? Those are our main peeps. They all like different language. It matters to them. Everybody uses alimony and maintenance interchangeably.
And they're all backing all of the lenders.
Yes.
Okay.
All the investors, all the lenders. So those are our federal guidelines that we have to use.
Okay.
Well, not everybody likes the word maintenance. So we have to make sure that
But it also sounds like the maintenance man. Like, yeah. I mean, seriously, when I say, oh, are you going to be paid maintenance? They're like, maintenance on my car, maintenance on my house.
Right.
Like, I'm like, no, like alimony, like, oh, alimony. Yeah.
So we have to tie it to alimony in some way, shape, or form, so that every platform will allow it. And that's a big deal. Plus, we have consistency and stability guidelines. So for how long you collect it and how long it has to last afterward. And that gets really tricky. It gets really tricky because we have a rule, 636. So you have to collect it for 6 months, and then it has to continue for 36 months after you close. Well, if you collect for 6 months, you don't have 36 months. So you have to make sure that all of those things are extended in the appropriate amount of time to get a mortgage loan completed and meet those consistency and stability guidelines.
Well, and I think people are probably already kind of overwhelmed with all of these spreadsheets and these numbers. But the fact of the matter is, this is an analysis that we use to go to court and to talk about alimony and maintenance. This is not the same analysis that Emily's going to run to refinance your house, or to even figure out if you can refinance your house. Because right now, everybody's issue is, I have a 2% interest rate, and can I keep it? I really want to keep it. And you're seeing that happen?
Oh, all the time. And the answer is most likely no.
Right.
Loan assumptions, nobody makes money on a loan assumption. So your investor, your servicer, whoever's you're paying your mortgage to, is not likely to do it. And if they do, they're going to make that process drag out and make you miserable to do so. If you have a jumbo, forget it. You've got 2 investors. It's not going to happen. But you're not going to be able to keep it. So whether you're refinancing right now or you're selling the house and you want to purchase in the future, let's say it's even 3 years down the road. It's not even right now. You need to set yourself up for success.
Yeah.
Prior to finalizing your documents and get that worked out.
Well, and the reality is, I think what people don't understand is, like, if you're going to go through this divorce process and you have some things, whatever they are, you will have to start understanding, where are these assets? Who pays the mortgage? Where's the insurance? What companies do we have? Because at some point, this is going to split off, and you're going to be taking some assets and they're going to be taking some things, and you're going to need to know where it is. So use this time to work with your financial team and say, okay, can I remortgage this house? Can I live off of this amount of money? Do I need to get a job? Or can we have some fancy ways of investing? Those are going to be different types of things that you can do. But you have to start becoming friends with numbers and becoming friends, or you have to seek out somebody who's going to help you understand the numbers. Because what's going to happen is, you have current expenses right now, and now you're going to sell the house. Now you're going to refinance the house. Now you're going to you're going to sell one house and buy 2 smaller houses. You're going to have to figure out what your expenses are after the divorce. You may have run them at the beginning, but you're going to have to start thinking, okay, how much do I spend on myself, on the kids? How much for the household? And one of the ways to do it that we encourage people is, at your bank right now, if you have online banking access, you can go in and download like 18 months of transactions into Excel or a CSV file. and you just pull that data down. Somebody on your financial team is going to be able to help you look at those expenses, analyze them, even if you don't know how to do Excel. Then that's why you have this team to say, okay, well, I don't know how much I spend in food. I thought I spent $300, but I didn't realize I spent $300 like a day in food, right? Or I didn't realize how much clothing and medical, and it gets granular. It's like, are you spending money on vacations? Are you have pets? Do you have house care? Do you have lawn care? Like, we had a huge blow up recently. A lawn care provider came and did their annual service of like $3,500, and everybody hit the roof because the money came from the wrong account, and they didn't have the money to even pay for other things. And this was an odd, so these things become important in the process for you to start understanding. But this type of expense still is not the same process that you would use if you went for getting a loan.
No, that's absolutely true. I'm not going to look at budgeting software and things like that, and I'm going to refer to your financial professional, your CDFA, and say, okay, I'm looking at what your current debt is, maybe on your credit cards or your car or your house and things like that. But I mean, I'm not going to know if you can afford to get your hair done or your nails done. That's why there's definitely more than one person involved.
And part of it isn't what you can afford. It is how have you as a family been consuming the income?
Okay.
So each month, where is the money coming from? Because we now have to split it, and most states have specifications. So this income and expenses is each party has to do it, each person has to do it, and file their own expenses, because they may be living separately even at that time. But you're also just starting to get a handle on, what does this look like? Like, can I afford this lifestyle going forward? Or unfortunately, what a majority of people have to realize is that maybe we couldn't afford the lifestyle even when we were in it. And we may have to make some hard decisions. A lot of people ask, like, how am I supposed to talk to my children about these types of things when, one spouse is going to have money or one spouse doesn't have as much money? And I think you have to start being honest. It's just that we're doing things different, or we're being more considerate of how we're spending money. And for the most part, it is people trying to figure out, like, oh, wow, I didn't know we spent that much on that, and you're looking through it. But if you download it, you can easily sort it. So this is just a simple example of a business valuation, but realistically, it's a market approach. And it's just looking at, like different types of things coming into a business valuation, or if you have a business that you own with or without your spouse. The reality is, even if your spouse owns a business and you think that their name is on it, but they started it within the marriage, regardless of the title of the business, the odds are is that you both own it. But that would be the first consideration, is to understand if that business is a marital asset or a separate asset. And then one of the other issues that we see is that there's income coming from the business that's paying the family, either paying one spouse or both spouses. So we have to kind of determine, how is that going to work in the future? Are we traditionally, judges do not want to keep family members as owners in the business. So they would be more likely to sell the business or to allow one owner to stay in it. Only in certain circumstances, and specifically in mediation. If you would like to keep your business, I would encourage you to do mediation, because you're going to have to come up with a plan that the judge says, okay, that seems reasonable and it makes sense. And the reasons could also be that you're all getting insurance, health insurance through the business. You all are actively working in the business. There's a way to figure it out that it makes sense. Or you could still get along. Not all divorces are horrific. There are people that can talk through it and get through it. So you're looking at, does that make sense, and what would it look like? Sometimes there are people that are concerned with some of the expenses, that if a spouse has been doing some wrongdoing in the marriage, that they might think that they're doing some wrongdoing with the money and moving money around, and that could be the case. But a lot of business owners move a lot of money around, and it only seems suspicious when we're getting divorced. So we look at expenses, we compare to the market. A lot of times we're doing sanity checks, or, does it make sense? Like, the values between here and there, does this make sense? So there's a lot of pieces of that particular financial puzzle that comes into play. And then you could have other things like a pension valuation or some sort of pension plan. There are times when people will say that there is a value to a pension plan because it can't be split between you and your spouse. There are also, you could be in the same court system and somebody would say you absolutely cannot value the pension. So this is kind of an area that some people would say there's an actual value to it, and some people would say you can't put it as an asset. So you might have to ask questions about your state. A lot of this is just to identify, am I going to have this issue? One of the issues with maintenance or alimony, as we talked about, is that sometimes people don't want to pay maintenance. For the most part, that payment of maintenance or alimony every month is very painful for people. In a lot of instances, it's painful to receive it because it's this constant reminder that I am like bound to this person or reliant upon this person. So in some situations, there's a way to pay out maintenance as a lump sum. So there can be a way to calculate, what does that look like? How many years would it be? If you can negotiate 5 years of maintenance at $4,000, the present value of what that's worth today is $230,000, right? Now you can negotiate, okay, well, if you keep the pension, then will you give, and you don't have to pay maintenance, then will you give me $220,000 of something else, right? And so that's what it is. It's not splitting everything down the middle. It's like, if I take this, then you take that. And can we get to a way that makes sense and is even or equitable or reasonable? Not fair.
Yeah. And depending upon how that's set up, especially if we bring in a financial professional, a CDFA or whatever, we can set up those lump sums as monthly income for you, or quarterly income, or yearly income. And then that skews our stability and consistency guidelines. It reduces them. And it makes it a little easier to qualify. Mm-hmm. Because we have control over it. Mm-hmm. And it doesn't have to be forever. It can be, in a revocable trust, or it can be in something that the financial neutral sets up for us.
Well, and another aspect is that if you have a business that ends up to be valued far greater than maybe some of your other assets, one of the ways that gets paid to the spouse is over time. Okay. And so it's like a payment. It could be $100,000 payment a year for 5 years, right? If you're going to use that payment, that distribution of your marital assets as income for the purpose of either purchasing or refinancing a house, you have to have it in a specific way, and we may have to pay it out in a way, right? It may be that you're negotiating a settlement, yet that settlement is not the best way to get the money all to go right. So that's why you kind of, I'm not an expert in what Emily understands, and Emily is not an expert in what I understand, and vice versa, even as a financial planner or pulling in a CDFA. All of these people have their unique skills that you have to pull upon in order to get the right people financially in the room. Your attorney and your accountant is not the one if they are not trained in this knowledge, right? Because we can know business valuation knowledge, and we go into a court system in Missouri and there are rules that say that your value should be different. Or we go into Illinois and it's different. So you can't just know what's in your financial industry. You have to know how it applies into divorce. And that's going to be kind of one of the bigger pieces. Here's some information about me, but mostly what we are in here for is to try to provide some more sustainable information so that people are better prepared in the divorce process. And you may not need to spend a ton of money in order to get there, but I think you need to hire the right people, and you need to find the right people that are, like if you are both renting and you don't need a mortgage person, that's perfectly fine. If you don't have a pension or you don't have retirements, that's perfectly fine. But if you have a house and you're trying to figure it out, you might need somebody that understands that. And so in that aspect, I think it's just start to be aware that you're going to have to become at least a financial sleuth, like at least start collecting some of the documents and then pull in the right people, or talk to, if you do have some people that in your area, talk to them and get some referrals for somebody that is specifically understanding the financial aspect for divorce. And because you were doing like mortgages and had like, this wasn't like how you started, you had to then go and get the training beyond that, correct?
Yes. If you are getting a divorce, do not go see just a mortgage professional, just Joe Mortgage that works wherever. That person is not going to get you where you need to be within a divorce. There are very special guidelines, requirements. They're actually more favorable for divorcing clients.
Mm-hmm.
And it's very necessary that you seek out a CDLP, especially for uncoupling, divorce, and even estate. So, yeah.
Well, because I think the interesting part that even Emily didn't understand is like when I come in as an expert witness and help people get through the divorce, I'm like, well, I hope you can refinance that mortgage because we've agreed to it. Mm-hmm. But normally the documents will say, we agreed to, you have 6 months to refinance it and good luck. But when they get divorced, I'm kind of out of the picture. So you need to have a financial professional or a mortgage professional that is helping you get through so that you can actually officially do that process after you get divorced. Most of it's going to take place after you get divorced, and you need those right professionals to take the names off the deeds, to make sure everything's transferred. All of those people, you could probably refer them to real estate attorneys, but these are the people that you should start reaching out to. Somebody that knows the specific areas, not a one-stop and they're a financial advisor and they know everything. That's where we see most of the people getting into a little bit of a problem, is if they're not seeking out more specialized, identify what your issues are, and then speak to somebody, and they'll probably help you contact the right people.
And do it early. Don't wait until that divorce is final. Then we're stuck with whatever is written there. And a lot of the times
it's not easy to unwind.
It's not. Yeah, and you just don't qualify. It's really sad, actually.
Yeah. Well, we appreciate it. And if you have more questions or information that you need, you can check out valuationmediation.com. And if you think you're going to need more support in the future, we're going to be offering some resources, probably monthly seminars where you can ask questions and things like that. But, reach out to one of us. Our information is linked below this video, and we can answer some questions. Most financial professionals will typically meet with you for a complimentary first meeting. So reach out to those professionals, take advantage of that hour and see if they're aligned with you and see if they're a good fit. And if they're not, go to another one. I mean, it's your divorce, get the right team that you feel comfortable with, because you could be working with them for at least 6 to 12 months or longer, and you want a team that you can trust. So I appreciate it, Emily.
I appreciate you.
And we'll be around soon. Thank you.